Good morning, everyone. Welcome to Daily Rates Live with the Mortgage Calculator. Give us just a minute here to go live on all the different platforms. Appreciate everybody tuning in nice and early. Uh, Today, we are going to be going through our live mortgage rates for a few different programs. And then we are going to be talking about our special deep dive topic here for today, which is affordable loan options for conventional loans. So, Jose will go through some options for us with that. I see some comments already coming in. Definitely appreciate it. Looks like we're live on all the platforms, so we'll go ahead and get started. What we'll do is we'll take the chat off the screen for now, but go ahead and keep dropping comments there in the chat as you tune in. And you can also drop any questions you have in the chat as we go through our deep dive topic here for today. We'd be happy to answer any questions afterwards. All right. So, welcome everyone. My name is Kyle Hershey. I am the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our CSO, Jose Gonzalez. We are a lender that specializes in non QM loans. And what we do every weekday at 11 a.m. Eastern on this show is go through our live mortgage rates. Then we do a deep dive into a different loan type. And today's loan type is going to be the different affordable, quote unquote, affordable options for our conventional loans. So, Jose will take us through that. But first, let's go ahead and check out the rates. So, Nick, if you're ready, let's pull up the rates for a few of the standard programs and take a look.
All right. So the rates are live for today. It is September 17th. All the rates are at 1-year lows still, and we still have some news coming today. So hopefully we see some more movement. We will compare all the programs and the standard APR for the initial rates today. If you'd like a full breakdown of all the itemized fees that go into the APR, a full loan estimate, please get with one of our team members. They'd be happy to send that over. For the demos today, we set a standard scenario. We'll set a single family home. We'll set a $500,000 purchase, $400,000 loan amount. That corresponds to 80% loan, 20% down payment. Set an estimated 760 credit score and an estimated 40% debt to income ratio. So with those settings, let's check out the rates today. Pretty much the same as yesterday, but again, these are 1-year lows, so absolutely amazing. 30-year fixed conventional for a primary, typically the most common option people think of when they think of a mortgage. Coming in today at 5.625 rate, 5.891 final APR there. And if for any reason our customer doesn't qualify for a conventional option, we typically want to present an FHA option. FHA allows more leniency on credit issues and a higher debt to income ratio, but does require upfront and yearly mortgage insurance. Rates come in for FHA at 4.75. When you add in all the fees, including the mortgage insurance, final APR at 5.676. So if our customer qualifies for both, they may consider FHA if they want to pay the mortgage insurance. Our customers that need to use it, definitely a very good option. And our VA options for our eligible vets and active service members. If you are eligible, these programs are definitely amazing. Rates as low as 4.99. Final APR with a standard funding fee here, 5.264. So notice if we compare across the programs, the VA is going to be the best option for our eligible vets and service members at the lower APR compared to the other options. So definitely take advantage. And the final standard option here that all the banks and lenders have access to, USDA. It's only for USDA eligible areas. That's the rural areas of the country. The property is eligible and our borrower is eligible. These are great options to consider. Rates as low as 4.875. Final APR 5.575 with the standard fees. So if our customer is comparing to an FHA, the USDA is going to be a touch cheaper, which is typical. And it's going to be a touch cheaper than conventional as well. So good option for borrowers looking in those areas. And that rounds out the standard options that every bank or lender can access. But if our customer doesn't qualify, many banks or lenders have to deny them. But we have 5,000 plus other options here, starting with our non-QM alt-doc options for a primary home. So if our borrower doesn't qualify using tax returns and the standard documents required for conventional and FHA, we need to switch to using alternative documents such as bank statements, 1099s, P&Ls, asset-related programs, all kinds of options. This option here is a bank statement option. Rates today come in at 6% flat. Final APR 6.309. So we're within about a half a point, which is typical of the conventional option. About a half a point higher to switch to alt docs. So great option for our borrowers that need to use those alternative docs. It's not that much of a cost. And moving on here to our investment properties. First up is our alt doc options for investment properties. So bank statement are similar, coming in at 6.5 rate. Final APR 6.823. And we'll compare that to our other investments. We do have conventional, but no FHA, VA, or USDA. for the government programs, but conventional does have investment property options, rates as low as 6.25, final APR 6.581. And we'll compare that to our favorite programs, our DSCR. Stands for debt service coverage ratio. No income needed from our borrower, no employment information needed from our borrower. Simply use the estimated rents to determine the DSCR ratio. If the estimated rents can cover the estimated expenses, that's a DSCR ratio of 1 or higher, which is preferred. For this demo here, we put a ratio of 1.5 so we can see all the programs pop up. The 3-year prepayment penalty option here is the standard option first. Rates come in at 6.25 today, same as conventional. And final APR 6.529, actually a touch cheaper there. And we can sweeten the deal with our 5-year prepayment penalty options. Rates come down to 5.875, absolutely smoking. Final APR 6.181, beating conventional by quite a bit there when we can add our 5-year prepay. And our final DSCR option is a no prepayment penalty option. Some states don't allow it, and some people don't want it. No problem. Rates come in today 6.5, final APR 6.823. So that's a touch higher than conventional, but I'd still say most investors would choose a DSCR loan and recommend most to add a prepayment penalty to drop the rates even further. And the final 2 options we'll go over real quick are 30-year fixed second mortgage options. Great options for our borrowers that still have a low rate first mortgage, lower than the rates we're looking at now, want to keep that first mortgage in place, but still need some cash out. They can access that cash out equity with a second mortgage instead of a HELOC at lower rates. So for a primary home, our second mortgages come in at 8.125, final APR 8.527, which is lower than a HELOC and not variable like a HELOC. And our investors can use the same options for a second mortgage, get that cash out, rates as low as 9.5, final APR 9.739. So those are the standard options we go over every day. Let me go ahead and get into today's topic. Jose is going to share some of the specialty options. So when we're doing our live demo, we have our basic, super basic scenario. We don't get to click all the specialty options. Which when we're in the conventional quotes, there are some unique programs under the affordable label. So this is a specialty program. So Jose is going to list the rules, right? There's always going to be rules, but these programs do have some amazing pricing. So we don't get to show that live, but Jose will show some smoking pricing here in a second. But first, let's talk about how they can access this pricing here, Jose.
Good morning, everybody. Thank you for joining us for Daily Mortgage Rates Live with the Mortgage Calculator. The affordable options that you see here are conventional loans offered by Fannie Mae and Freddie Mac, our 2 GSEs for conventional loans. And what makes them affordable is that they offer reduced interest rates and reduced mortgage insurance for borrowers that are at 80% or below the area median income for the census tract in which the property is located. Now, there are several exceptions to this maximum income restriction allowed. The exceptions are if the property is in a low to moderate income census tract, if the property is in a minority census tract, or if the property is in a disaster area census tract. If it's any of those 3 options, then you would be able to originate the loan for that borrower without the 80% or below area median income restriction. And whether it's Fannie or Freddie, you can go either to the Fannie geocoder for AMI or the Freddie Mac geocoder for AMI, which is area median income, plug in the property address and see what the area median income is, and if it is in any of the 3 exception category areas, so that you could eliminate the income restriction. Now, like I did mention, this program does have substantially lower interest rates, mortgage insurance, and also 97% max loan to value. The other thing to consider is that you do not have to be a first-time home buyer to purchase with this option. You just have to meet the income requirements unless it is one of the areas subject to an exception. So let me go ahead and share the options with you that we have for today. First option is for a 1-unit property purchase, 3% down. And if you've been looking at interest rates for conventional loans, you will note that these rates are absolutely smoking. You have 5.875 with a lender credit of 0.125 as our lowest cost option, and you have 5.125 at a cost of 2.5 points as our lowest rate option for our 97% LTV purchase here. And this one happens to be Fannie Mae Home Ready. Now we have another Fannie Mae Home Ready option, which is for a 2 to 4 unit property purchase, still at 97% LTV. And you will note that there is not a loan level price adjustment for the 2 to 4 unit property configuration. So again, same rates you just saw, lowest cost option 5.875 at a cost of 0.125, lowest rate option 5.125 at a cost of 2.5 points. So now we share the renovation loan option. This one happens to be Freddie Mac's Home Possible Choice Renovation Loan for a purchase with only 3% down. Now, those of you that may not be aware, the renovation loans can be used when purchasing a property that either has condition-related issues that would not allow it to close with a non-renovation loan, or simply the borrower wants to update kitchens, bathrooms, windows, and whatever else they want to do to the property as part of the purchase to make it their dream home. So you are looking at a little bit of an increase in the rate here, 6.625 at a cost of a half a point. And you can buy that down all the way to 5.625 at a cost of 2.5 points. But certainly cheaper than using your credit cards to do these renovations after closing. Our next example here is for the rate and term refinance, right? This is now, please note that there are no cash out refinances for this loan product. Rate and term is the only one. And you will note that 5.875, again, same rate as the purchase, is a lender credit at 0.125, and your lowest rate option is 5.125. So very good options here that are available. Last one I'm sharing with you is manufactured home, right? That can be a little challenging. Well, great news is that this does offer a very competitive option. Typically for manufactured homes, borrowers do tend to go to FHA, although do remember that FHA is a little bit more restrictive in property condition and requirements, including structural engineers inspection reports required from the onset for a manufactured home versus the conventional loan. And these are conventional loans, even though they are a 3% affordable option, they're still considered conventional loans, and they would not require any type of structural engineer's inspection report unless the appraiser makes a note of deficiencies in the foundation when they do the appraisal. So 6.124 is our lowest cost option at par, and you can buy that down all the way to 5.375 at a cost of 2.25 points. So certainly look to the mortgage calculator for all your affordable lending options, as well as non-QM, agency, and commercial.
All right, thank you, Jose. It looks like we have a couple questions that came in here, so we'll go ahead and get to these questions here. We'll pull them up on the screen. So first question is, I bought my home last year in November with a VA Jumbo, currently looking into doing a VA IRRRL. What is the current rate for that type of loan at par? Well, what we could do is help you out and get you a real quote with the information if you go to themortgagecalculator.com, or you could email support@themortgagecalculator.com as well, and we could have somebody give you an actual quote with all of your information, your actual your data there. But great rates right now, and a VA IRRRL, very quick and very easy. Okay, so next question. So if FHA denies due to property conditions, this would be a good one to use as the backup plan. That was, I think, a couple examples ago.
Yeah, that was probably referring to the renovation loan. Yes, absolutely. The renovation loan is the workaround for if you have a property with condition related items that will not allow you to close. But we're talking about like, vandalism, missing air conditioning unit and other components, missing kitchen cabinets. I mean, those are obviously glaring examples of condition related items, but it could be other things not as obvious, but certainly as devastating, like all of a sudden you're told the property needs a new roof, right? You can't get insurance. Your life expectancy of the roof is less than the minimum years threshold. What do you do now? Seller says, hey, take it or leave it. You knew what you were getting into. That's why I gave you the price that I gave you. So at that point, you could pivot to the renovation loan, get your estimate for the roof repairs, and then submit that and get everything approved that way.
All right. Looks like that's it for the questions. We do appreciate everybody tuning in. Definitely appreciate the questions. Remember that we do this at 11 a.m. Eastern every weekday, where we go through our live rates and then do a deep dive into a different loan type. So we will see you all tomorrow with a new loan type.